The most expensive thing you own. What is it? Is it insured? For the most expensive thing you'll probably ever own, you're going to want title insurance. This is Dale Shin, realtor in the Los Angeles area. If you're new to my channel, click the subscribe button to stay tuned for helpful LA real estate information, and click the bell to get notified as soon as new videos hit. One of the most expensive items you'll own that I know you're going to have insured is going to be your car. Well, by law, it's required to have at least liability insurance, but if you're making payments on your car, you've got to have full coverage as well. Now, probably the most expensive thing you'll own is going to be your house. And if you're making payments on it, you're going to have two kinds of insurance on it: fire and title insurance. So fire insurance, or hazard insurance as it's also known, is in case your house gets damaged. It's called fire insurance because fire is the biggest danger to your house typically, and it's there to pay out for damage or loss due to fire, but in actuality it can cover for other types of damage as well. Check your policy. But what is title insurance? Title insurance is to protect your ownership interest in a home or property. I'll explain in a roundabout way. Let's say you're going to buy a used car. Whether it's from a dealer or a private party, once you've paid for it, you're going to get the car, the keys, and most importantly, the title. That piece of paper that actually gives you ownership of the car. If the seller has title to the car in hand, there's usually no question that the seller is the owner. The seller signs the title over to you, you take that to the DMV, and after an eternity, your ownership of the car is official. If the seller has the actual title to the car, there's typically no question that the seller is the actual owner of the car. It's straightforward and simple. When buying a house, it's not that simple. A house can be hundreds of years old and had dozens and dozens of owners who are husband and wife or several members of a family all on the title, joint tenant owners who are tenants in common. There's a chance that way back when, someone's interest in the property wasn't properly recorded and released. That person could come out of nowhere and claim ownership to the property. Or maybe there was a loan on the property that wasn't fully paid off before it was sold. That lender could come back and foreclose on the property. But wait, that's not all. There could be liens on the property from contractors who didn't get paid, boundary issues with a neighbor, easements, all kinds of title defects on a property that could jeopardize clear and unquestionable ownership of a property. Title defects can make selling a property difficult or impossible. Would you want to buy a house with title defects? I didn't think so. This is where title insurance comes in. Title insurance is basically a guarantee that you get clear title to a property. How they do that is by thorough research. Title insurance companies will trace back the transfer history of a property all the way to its original owner to verify that each transfer matches up all the way to the current owner. They'll check to see all the loans ever issued on the property, old and current, and for old loans, see if they were paid off or not and make sure it's properly recorded. They will also check on anything else recorded on the property like liens, easements, etc. And of course, verify basic property information like legal description, address, size, etc. After all this research, the title company will issue a preliminary title report and a commitment to issue a policy of title insurance. This insurance policy will protect the buyer from defects in the title. It's important for the buyer to review the preliminary title report as part of their due diligence and find out about anything they don't understand. There are typically two types of title insurance, one to protect the buyer and the other for the lender if the buyer is financing the purchase of the house. These are separate policies and typically do not overlap. Here in the LA area, it's customary for the seller of the property to pay for the buyer's policy, while the buyer pays for their lender's coverage. It's a one-time fee, usually a percentage of the purchase price of the property that is paid for through escrow and made effective at close of escrow. So what is title insurance? Title insurance is an insurance policy issued to protect your ownership of a home. You'll want this for your own peace of mind. Hey, so what did you think of this video? Comment below with your thoughts or questions and I'll get back to you. Click the thumbs up button if you liked the video and share with a friend. But if you didn't like it, that's okay. Give it a thumbs down and comment why. It'll help me put out better content. Thanks for watching, and I'll see you on the next one.